Hello, traders. It's Gibran here from Peeps Pirate, and I'm back again with another video. And it's gonna be a long video because I'm doing the best. I'm not kidding, the best scalping strategy on the market. This is the perfect strategy on the market. I'm gonna tell you specific times to trade it in the Telegram group, but you can trade it most of the time. But I'm gonna tell you specific times because we're dealing with a shitty broker, so we're gonna play by his rules. Okay, let's get into it. Okay, so this is a strategy. Sorry, is the strategy, and as you can see, it's already set. So I'm gonna clear everything. Yeah, I think I've saved it. I'm gonna clear everything, and I'm gonna show you how to do it. So let's we're gonna it works on any volatility indices except boom and crash, and now binary has, I mean, derive as like drift switch. I haven't tested it on it, but works very well on the famous V75. So it's kind of like a V75 strategy, and it's the best. I'm not kidding. Like, I've been using this a lot to recover my losses, to make money fast. Like, it's the best. uh, we're gonna go with V75, obviously, and we're just using indicators. People will be like, "Why are you using indicators? You're against indicators." Yeah, I am, but scalping, like in short period of times, I use indicators mostly, and because it's binary derived, we're dealing here. So let's go. As you can see, we're starting it. Just put on, it works on phones, works on PC. You can do, all the indicators are available on MT5, MT4, whatever you're using. So it's available on, you can do this on phone or PC, whatever you're using to trade. So we're gonna add, we're gonna go to the 5 minutes time frame. It works best on lower time frames, works really best on lower time frames. So I'm gonna advise people to use mostly 5 minute time frame, not higher than that, maybe to 15, but mostly 5 minute works best on 5 minute strategy. Like, works best, it's like a 5 minute strategy, it works best there. So just go and add your lines on the recent high and low. So as you can see here, let me clear this up. I'm gonna do this. This is the lower low, and you can see I'm not doing this because I'm not gonna go with high here. Nope, I'm not gonna go with this because the market is not over there. Like, this is the high, is the highest I can see from this area. This is it, but like, this is the most I like here. It's kind of like the market came here and it was bouncing off. So we're just gonna put there where, like, those higher highs, which are above the mark, where the market is. The market is right now here. We're gonna put that, and I'm gonna put another one down where the market, like the lower low of the market, where you can see it. So don't go to 4 hours and do like down here and up here. No, 5 minutes. And if you're in a phone, you can zoom in. If I zoom in here, I can see the market clearly. This is the high I can see here. Right here is the high I can see. If you zoom in, it's much better. And this is the low I can see, it's down here. So we put those two lines, and we're gonna trade. We're gonna see right here in this, between these lines, in this range. Like, the market came up here and then it went down and bounced back, and it started going up. So right now we have to say we are in an uptrend. So we're gonna go with buys from here. We're in an uptrend. So until the market gets here, we're still in an uptrend. If it breaks, it's an uptrend. So we're basing on buys. So we're still going with the trend. As you can see, we're still going the trend. So yeah, price action is involved. I did this thoroughly. Like, I did research on this. So it's a good strategy, even though we're using indicators. And then I'm gonna go add my indicators. I'm gonna add like the custom moving average. I'm gonna add 21, like a 21 moving average. I'm gonna add 21 moving average. Why 21? Just add it. I will explain it later. Exponential. 21 exponential. Okay, the thing is that people don't understand. They just tell you exponential and simple and smooth and everything, linear weight. Okay, exponential is like smooth and simple is kind of simple combines exponential and smooth. That's simple. And but exponential is just because of the market moving too fast on volatility. It's like it captures what is happening in the market right now, like recently, what happened recently. That's exponential. Smooth is kind of like works better on a long period of time, like it covers in a long period of time, like how the market moved in a long period of time. So it uses parameters of how the market moved in a long period of time. So that's smooth and exponential the difference. So because of volatility and we're in lower time frame and we're in a volatile market, exponential. I think we're clear on that. And you're gonna have to go with colors. Allow modification signals. You can just take that. Colors for me, any color you like, which will be easier for you. Any color should be easy. I'm just gonna go with this one with a blue, and I'm gonna make it a little bit thick. So yeah, and then I'm gonna add another one. I'm trying to be fast in this video, but color, I'm gonna go with the second one, like green. You can go with any colors which are good for you, any colors which are good for you. So I'm gonna go with dark green, a little bit thick so that I can see, and we're gonna go with 50 ml. Also exponential. And then we're gonna go to custom moving average again. I know it's like a process, but trust me, it's worth it. It's worth everything. And I'm gonna go with the 200 now, and I'm gonna leave it at red. Also, yeah, a little bit thick. Okay, so that's the first process, adding the custom moving average. That's the first process. I don't think I did exponential on this one. Nah, okay, that's why it was there. I think you can see the difference right now between like if I do a 200 MA smooth, is there because it acts over a long period of time. But if I do it exponential, it's a little bit closer, see, because it goes with how the market is acting recently, like how the market is acting recently, and which is what we are doing right now. We're not trading in a long term. So if you're trading like in 4 hours, you can go with it smooth, but right now exponential. That's the difference between the two. If you didn't know, now you know. And then after this, we are gonna add our RSI indicator. Yeah, those are the indicators we use, because people used to ask me like, why don't you use indicators much? I was like, okay, let me find a strategy which works well. But here, listen closely now. I'm gonna go with any color which you choose. I'm just gonna go with the golden color with the lines, as usual, a little bit thick on the pixels. And then, but here though, I'm gonna change everything to the levels to 50. Change all the levels to 50. All the levels to 50. Why? I will explain. And I'm gonna go with black and then not dotted line. But I think maybe yeah. Okay, I'll just go with the dotted line. This one, yeah, looks better. Okay, so we're done. Right now we are done. We're done with the indicators. I think we're done. Yeah, no more indicators than this. Yep. No more indicators than this. Okay. There are like 3 confluences here which we need to be trading with. Three confluences here. Okay, so now it's time to pay attention now. As you can see, we are in our between our area here, in this area where we have marked our line. The price now has broken this level, which is good because yes, 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 it's good. The price has broken this level, which is better now, even while I was explaining this. It's a demo account, so don't worry, guys. I won't place any order. So we're gonna go, because the price has broken this level, we're gonna go with the next one. So I'm gonna remove this line, and as you can see here, the market clearly right now there are three confluences which you should be doing, because it was an uptrend. It was an uptrend. We need, because we are going for buys, we need the blue line with the 21 MA to be above every line for us to go for a buy. I don't think people heard me. We need the blue line to be above the green and the red one for us to go for a buy. So right now here, we cannot do anything. We cannot do anything for buys. Even though it's an uptrend going, we cannot do anything for buys. So we need like a confluence here to make sure the market is like it's going with us. So we cannot do anything. Just let the market come to you. You have to be patient with this. It makes a lot of money. It's tempting. So you just have to be patient with this strategy. Okay, so we are gonna back test it. We're gonna go with in the past trades, right? We're gonna go on the past trades. Okay. Let's say, because right now I cannot act on, right now I cannot do anything. So I'm gonna go with the past trade. So okay, let's see. Let's choose any. I'm just going with random places where the market. Let's say the market was here maybe, or here, right? Let's say the market was here, like there was nothing. Like it was just here, right? Yeah. Let's say the market was here. After this red line to the right of this red line, it was not there. So it was just here. So let's say it was. So as you can see, we have marked where the price was high. It was like this place, and if you go to the lower line, it is the lower level. People say it's this one, okay, because the market was not there. So I go here. We're going in this range, right? It was here. The market was here, right? Yeah. For us to go for a sell, this line, the first confluence, we have to be in a downtrend, right? We have to be in a downtrend. So this line, the blue line, 21 has to be below each line. So the 21, 50, and then 200. That's the first thing to know. 21 for you to get a sell, the 21 must be below everyone for you to go for a sell. 21 and then 50 and then 200. So I'm just gonna go with the colors now because it's easy. So blue, green, red, whatever color you're using, just know the 21 has to be below each other line for you to be able to go for a sell. So I think we're clear on that. That's the first thing. So let's say the market was here. It was just, yeah, it was here, right? While the market was like green and everything, so we couldn't do anything. We could be waiting. We could be waiting and waiting until this point here, right? This point here. So it could be waiting this point here, and the second confluence, we have to look at the RSI. So because right now the blue line is below the green line and then the red. So we're okay for a sell, right? We're okay for a sell right here. We're okay for a sell. But right before this candle, remember that, right before this candle, we're okay for a sell. So we are going to the RSI. The RSI has to be below the 50 mark. It has to be below the 50 mark. People say why? Because the RSI marks the higher where the market has gone and the lower where the market has moved. So we're just gonna we're not going to where it touches the 70 and the 30. So we're just gonna go below the 50, and because we're scalping here, and above the 50. So if it's below the 50, we know it's in a downtrend, right? It's in a downtrend. So we are going with the sell. So right now everything agrees. This the first confluence is just the blue. The 21 MA is below the 50 and the 200. So that's the first confluence. The second one, RSI, is also below the 50 line. So that's the second confluence. The third confluence, we're going to mark for the wait for the candle. We're gonna wait for the candle. We're gonna wait for the candle. So this market was here before because this candle opened. So it was here that it went up, it went down. You could see clearly in a lower time frame how this works, because also people I use this sometimes in a lower time frame, in 1 minute time frame I use it. You can use it in lower time frame, but 5 minutes is best for me to analyze it. So if you have trouble in noticing this, you can go in lower time frames. So right now we agree. So we're waiting for candle. We usually wait for a candle. If after this candle there's a momentum candle, like okay, here a momentum candle is like a big candle. Like there's a big candle which follows up like small candles, or like an engulfing candle, like that kind of candle after multiple small candles. Then you can make your move. Then you can go with your you can go with your trade, because you're scalping, so you can go with it. So you can sell right now. You'll be selling maybe here when it opened, or here, and but your stop loss has to be above somewhere here. So let's say we're gonna clear this. We're gonna use this line, right? We sold right here, and your stop loss was somewhere here above that candle. Oh, sorry. It's gonna make sense in a while. The stop loss was above that candle, so I'm gonna mark the stop loss with like a yellow. Oh no, yellow is not good on the white, so I'm gonna go with like dark golden. Yeah. So the stop loss was there, and then it has to be a 1:2 or 1. So the stop loss was there, and your profit has to be 1:2. So if you you sacrifice $1 or $2, you have to get like $2 or $4, right? So right now, let's see here, we go. It was 0.2% of stop loss. So yeah, and yeah, it was a more than 1:2. So it was a good trade. Right now you could have went into this trade and then went for 1:2. So for this trade to work, it has to be also a 1:2, a 1:2 strategy, guys. Like it has to be a 1:2. Don't go with 1:1. No, 1:2. That's the fourth thing. So after the candle, the fourth thing is make sure you go 1:2. If this works, like right here, this could have worked also. Okay, people might not see this. I told you the line agree, right? The line is below the green line, the blue line is below the green, and the 200. Guys, these are just colors, but I mean like 21, 50, and 200. 21 is below everything. Let's go to the RSI. RSI is below 50. This is our 50 line mark. So another confluence after the bullish candle, there was like a biggest candle, so you could have bought here. There was a big candle, so you could have bought here, right? There was like a momentum candle, so you could have sold here, and your stop loss will be okay. Let's see. You could have sold here. Your stop loss will be above this candle, right? And then let's see 1:2. From here, it was a movement of 0.4%. So let's see, it has to be 0.8 here. So this was a fail, right? If it was a trade. So that's what I'm saying. You have to go with 1:2. So if you took this trade and then it came here, you took another trade. But I think if you took this trade, you will still be in the market while it's here. And so you have to make sure it's a 1:2. That's what I'm saying. It has to be a 1:2. Another thing, you can still go on another time, like it's happening here. It happened. There was like a momentum candle. So you kind of have to go with the candlesticks pattern, but most of the candlesticks pattern here, which happens are like the normal ones. So if you know price actions, you can see this is like an engulfing candlestick pattern. The green and the blue and the red one, and also this one is like three candles here, which mark momentum, like three candlestick pattern. There's a pattern, yeah. There is, I forgot the name for it. I just call it like a three stick candle stick, like a three candlestick pattern. Like there's a three patterns of this like big candles of either bullish or like bearish right now. So after these three, and the market right now, it's down. Everything, as let's see, everything is in confluence here. When we are still in a downtrend, right? Yeah, and we're in a downtrend right now, and then the RSI is below, right? Yeah, that's the taking confluence. The candles here show like there's a momentum going down, like because all the big red candles right now, right? Yeah. So I will go and buy. Let's say I will buy here. No, I will sell. Sorry, I will sell here. I'm confusing this so much. I will sell here, and then put like stop loss right above this last candle, and then wait for the market. Let's see. Let's see. Let's see the ratio here. 0.3 or 0.4. 0.9. It's more than 1:2. So see, you could make like now, you would have made money here, you would have lost here, you would have made again here. So here you made a 1:2. So if maybe you were sacrificing $2, you would have made $4 profit, right? And then here you would have lost $2 because it was a 1:2. So you wait. If you go 1:1, you could have made money here. But like 1:1 is that like if you find a loss, then the other trade, that means you lost on the other trade, right? So like now you could have made a four, like here you could have made a trade here. I'm gonna use green one, the red one for the good trades, the black box for the bad trades. Then you could have made a loss here. So $4 loss, and then $4 profit, $2 loss. And here you could have made $4 if you're sacrificing $2. $4 loss, $4 profit. So you kind of lost just $2 of $8. That's $6 profit. And I'm saying this if you are risking like $2 each. So in each trade, but aiming to gain four, like to get like $4. So make sure it's a 1:2. Make sure it's a 1:2. Make sure it's a 1:2. That's the full strategy right here. We're gonna go with this. So just bear, if you wanna go and try it, back testing it on your own, you're gonna go with another buy. Okay, let's see for a buy here. Right now, here the market was okay. Let's say it was here. This is a good example. Say the market was here. Everything is in confluence. It's an uptrend, right? It's an uptrend. It's an uptrend, and right now it's an uptrend. The green line is above the blue line is above the green and the red. So 2150, 200. That's the first confluence, and it's uptrend. It's an uptrend. So it confirms it's an uptrend, right? And then the RSI is above the 50 mark, right? Yeah. And then let's see the candlesticks. Let's see. Maybe the market was here, right? And you can see here we are waiting for like we usually wait for momentum candle to kick in. Momentum candle to kick in, and you can see here there's this candle here. Oh, sorry. There's this candle here which came. So you could have bought here and went all the way. This could be a stop loss, could be somewhere like here, right? And then you could have made like money a lot if you keep holding it all the way to the top. But some will say like, no, I'm waiting for more confluence. I want a 3 candlestick pattern to make sure it's going up, right? 3 big bullish candles, and okay. Then after here, you buy. Your stop loss still has to be here, right? If you buy right here, okay. If you buy right here, that means your stop loss has to be below this place, right? not just this candle, because you're using this pattern, right? Okay, maybe you want to risk it and you use this, you just go below that candle, right? Okay, let's see, 0.6%. Okay, the market went up, and yeah, you could have made one ratio, up even 1:6 if you wanted to. So yeah, it was a good trade. So just go, make sure you're going with a trend at first. So there's four components. There is trend, right? The first thing, make sure it's an uptrend or a downtrend. And to make sure there is an uptrend, that's why we have this moving average. Make sure the moving average, the 21 is above the 50, and the like 21 comes first, and then the 15, and then the 200. And for the downtrend, make sure like the 21 is below each, is below like both of those other MAs. So, and then the third one is the RSI. RSI, the RSI, make sure it's below. If you're going for sales, make sure it's below the 50 mark. If you're going for buys, make sure it's above the 50 mark line. And the fourth one is the candlestick, right? It's the candlestick pattern. That's the fourth thing, candlestick pattern. That's the like you want to make sure the candlestick pattern like it's in. Like make sure like just go with an engulfing candle and the three pattern candle. All the candlestick pattern to enter to place your interest. Just don't go like without nothing. Like if these conferences don't go like right now here, and then you feel like you know what, there's like a trade here, oh let me see, and then you enter here, because there's this, and then it's above everything, let me just enter this trade, and then you are stopped out, you see. So make sure there's and not small candles. I don't mean small candles like oh, what's this again? I don't mean small candles. Oh. Yeah, it's kind of hard to zoom on the MT5. I don't mean small candles like this candle right here, right? Yeah, no. Go with like big candles, which you'll notice are big, right? Go with those kind of candles. So sometimes you might lose, sometimes you might, like, it's not like a perfect thing. It's not a horrid glare, no. But like, it's a working thing. Like, it works. If you go with the 1:2, that's the last final thing for your risk reward ratio, 1:2, you are definitely gonna make money with this strategy. I'm not kidding. Try it on demo, try it on anything, try on other other candlesticks, but like other volatility indices. But for me it works best with the V75, so I would suggest you try with other things. So no. So right now, as you can see, we're waiting. You wait for the candles to be up. Just don't force trades. This goes above everything, and this is up. You can go for a buy. If it's not on anything, you don't understand it, nothing like goes with all your conferences. So just stop it. Wait for the market to come your way. So I think that's all. If you have any questions, you can ask in the group in Telegram at Pips Pirate. You can ask anything, but this is the best strategy for scalping. Just go and backtest it, go and do anything you wanna go, like check on it, how it works and everything. But those are the four things. So the trend, the five things, sorry, the trend, the lines, which confirms the trend is down, right? Like right here, it's a downtrend, right? Yeah. So I'm going with like the lines 21, 50, 200. The RSI is down. The RSI right here is down below the 50 mark. See? Yeah. And there's a big candle here, right? The market is going down. There's a momentum candle here. So you could sell right here. Put your stop loss right there, and it'll be a right 1:2. So some people might go for a lower time frame, like a 1 minute. I don't blame them. Like, it works also on 1 minute. The thing is that 1 minute doesn't give me the perfect entry like the 5 minute. Like 1 minute doesn't give me the perfect entry like the 5 minutes. So that's why I like using it on a 5 minute. So yeah, trust me, you will make money with this. This is the only thing. If you want to make money, use this. Sometimes you can hold, it's up to you, but I suggest not holding, just go with 1:2 because we're in a volatile market. You can do a 1:3, it's up to you really, but not less than 1:2. Don't do 1:1, don't do it. Trust me, don't do it. But this is the kind of like the holy grail of scalping volatility V75, and this is the best strategy there is. So I hope everyone like understood that. And yeah, you see, like right now you could see nothing in the 5 minute, but in the 1 minute, see, you can see it's happening. People will be like, okay, 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 I'm looking for that big ass candle here. You could have gone here. This it's up. Could have gone. It would have been a perfect trade. So it works also on a lot of time frames. But like I won't suggest it doing on 15. No. 5 minute and one. So it works. It works. If you wanna go in the market and out, five works on 1 minute, works on 5 minutes. So yeah, go and use this as you might, and it's a good frequent strategy. It's a really good strategy. So I hope you enjoyed the video, and good luck everyone with your trades, and see you in the group. If you have any questions, anything about this strategy, this is the strategy I use every day.